Hello everyone, welcome to my channel, and in this video I will be explaining shortly about books of prime entry, control accounts and trial balance. So this explanation is exclusively for doing WTO accounting questions, and this is not a very deep explanation. So I will be doing deep explanation with questions on each of the topic individually in separate videos. So for those who are uh, doing questions in these areas, so this will be useful for you to just get an idea, or just to recall the theory part that you have learned. So firstly, uh, so this is from Olives Academy, you know that, and you can contact us for the classes. We do online and physical classes. Online classes for foreign students and local students, as well as physical classes for local students. You can contact this number, WhatsApp this number, and book your classes. Right. So uh, first we will see what is books of prime entry. So these are the books that are maintained in accounts department or by the accountant to record the transactions before recording to the individual ledgers of the same expenses or income. So for example, we have books of prime entry, a sales day book. What do you record in the sales day book? The transaction, all the credit sales. So if you take a sales day book, you record the credit sales, and purchase day book, you record the credit purchases. These are the very important thing that you have to recall from the area that you have learned previously. So it will be very useful to look at it or focus on it carefully to understand this. So sales return day book, that means the returns of goods sold on credit, right, on credit. So purchase return day book, so returns of goods bought on, returns of goods bought on credit. Cash book, all the bank transactions. Petty cash book, all small cash transactions, petty transactions. And the journal, all the transactions that are not recorded elsewhere. If you can't record in any of this day book, so that kind of transaction should be recorded in the journal. So that is all about books of prime entry. Again, I'm telling you, books of prime entry means these books are used to record the transactions happening then and there before transferring or taking to the general ledger of the same account. That is called books of prime entry. If you don't understand, or if you have any questions in this regard, you can comment it below to get understood. So I will be explaining according to your requirement. Secondly, you can see control accounts. What are control accounts? So this is the ledger created to record the summarized balance from the same subsidiary account. Let's say if you take a trade debtor account, you can see there will be number of customers in the trade debtor account. Individual customer account will be there. You can see that company A, Mr. A, B, C, D to Z, and there will be companies. So you can see if you take a large company, that will have like 4,000, 3,000 to 4,000 or more than that number of customers. So you can't bring all individual customers to your trial balance, so that we use control accounts only to transfer the total net amount of the debtor account or creditor account or whatever account which has large amount of transactions to those control accounts. So we take the total summary of the summary, means it's a total amount, total summary. We transfer it from the individual ledger account to the control account. So the control account will have the summary amount. So since these accounts have large number of transactions, these will be summarized in the form of control account, and the net amount will be transferred from sub account to the control account, which we discussed now. So what would be the entries for transferring such kind of control from individual ledger to control accounts? So if you take trade debtors, that means trade receivable account. So you credit, normally if the sales happen, credit sale happens, what you do? You credit sales account and debit trade receivable account. Now from this trade receivable account, you are going to transfer the balance or summary amount to the control account. For that, you credit trade receivable account, and so that the trade receivable account will become nil or zero, and you debit the trade receivable control account, and this trade receivable control account will be taken to the trial balance. And likewise, if you take trade payable account, so when credit purchase happens, so you debit the purchase account and credit the payable account or the debtor account, or the not debtor account, so this creditor account. Let's say you bought some item for credit from ABC company, so he is your vendor, he is your creditor. Now you record the transaction of that purchase, credit purchase, as debit purchase account and credit payable account, or the ABC company account. Now you debit ABC company account of the same amount and credit the trade payable account, so that the ABC company account will become zero. Then this trade payable control account will be taken to the trial balance. Right. The next one is the trial balance. Once all ledgers are balanced, these balances will be shown in a list form in the respective debit and credit columns. This list is called as trial balance. The total of credit and debit must be equal in the trial balance list. If not, there is a mistake in the ledger, so that it should be checked. So this trial balance will be generally having all the ledger accounts in the chart of accounts or in the accounts department. So in the accounts department, there will be so many ledger accounts: income ledgers, expenses ledgers, and liabilities ledgers, and receivable asset ledgers. So there will be so many ledgers. All these ledgers which have transactions will be listed in columns, and debit column and the credit column will be there according to the real balance of the individual ledgers. This credit and debit will be filled, and finally the total will be taken for this total, the credit total and the debit total. Both total should be the same. If that is not same, then there is a problem with the accounts. So there may be errors, there may be mistakes, so these mistakes should be corrected. Finally, the credit and debit should be balanced together as the same amount. So this is all that I have to tell you about the trial balance. And after doing this trial balance, one more thing that I want to point out here. So the next step after doing the trial balance, based on the trial balance, we have to prepare the financial statements. What are the kinds of financial main key financial statements? The first is statement of comprehensive income, which is a profit and loss statement, and the statement of financial position, we call it balance sheet, and statement of cash flow, and where we show cash inflow and outflow, and the statement of changes in equity, where we show the movements in the equity. So this is all I have to explain in this video in order to do those questions in the AATE. And for those students that who need a very short explanation on these topics, thank you very much, and we'll meet in the questions.